One of the most significant financial decisions that many people will ever make in their whole lives is the purchase of a home. This is because the purchase of a home is typically the most significant investment that they will ever make. It is possible that the year 2024 will not be the most favorable moment to purchase a home because of the confluence of a number of factors. Before making such a large investment, those who are contemplating the purchase of a home have to give careful thought to the present state of the economy, the trends that are occurring in the housing market, and their own personal financial readiness. In the year 2024, one of the most significant concerns regarding the economy of the entire world is the persistent uncertainty that exists in the economy of the entire world. While there is a likelihood that certain countries may experience prosperity, other regions are battling with economic instability, inflation, and shifting interest rates. Despite this, there is a possibility that some countries will prosper. In particular, high inflation rates have the impact of diminishing the purchasing power of consumers, which can lead to greater expenditures for expenses that are necessary for day-to-day living. This could be a consequence of the fact that prices continue to rise. In the context of prospective homeowners who are striving to find a balance between their mortgage payments and their other financial obligations, this economic circumstance creates an atmosphere that has the potential to be challenging. The rates of interest are still another significant factor to take into account. It is projected that interest rates will continue to be volatile as a result of the fact that central banks all over the world are continuing to make modifications to their monetary policies in an effort to combat inflation. The affordability of mortgages can be significantly impacted by the association between higher interest rates and increasing monthly payments. This correlation can have a significant impact on the affordability of mortgages. Not only does this put a strain on the finances of those who have recently purchased homes, but it also contributes to reducing the total amount that they are able to borrow. There is a possibility that prospective buyers in the year 2024 may realize that the increasing cost of borrowing money either lowers their ability to obtain the home of their dreams or compels them to settle for properties that are less desirable. Both of these outcomes are possible. In addition, there are indicators that the housing market itself is having difficulties. Due to the fact that the prices of housing in a number of different places have skyrocketed over the course of the past several years, there are now concerns surrounding housing bubbles. The year 2024 is the year that these inflated prices are beginning to show signs of adjustment. Nevertheless, this process is slow and fraught with significant risk. In the event that prices fall, a homeowner who acquires a home at the peak of a market cycle runs the danger of having negative equity in their investment. They have a bigger amount of debt on their mortgage than the home is truly worth, which indicates that they are in bad financial shape. It is possible that the financial impact of this will be catastrophic, particularly for those individuals who may be compelled to sell their home earlier than anticipated as a consequence of changes in their lives, such as changes in the dynamics of their families or changes in the location of their place of employment. In addition, there is still a significant issue with the inventory of properties that are available for purchase. A significant number of regions are experiencing a serious shortage of homes that are priced at a reasonable level, which motivates buyers to participate in strong competition with one another. The presence of this competition may cause prices to rise even more, and consequently, bidding wars may break out, which frequently result in buyers paying more than they ought to for the homes they are interested in purchasing. In the case that the home does not appreciate as much as anticipated, or if the buyer's financial condition changes, the buyer may experience regret and financial trouble as a result of these events. Those who are contemplating the purchase of a home ought to also take into account the consequences that their choice will have in the long run. There are additional costs connected with owning that go beyond the initial investment. These costs include ongoing expenditures such as property taxes, maintenance, repairs, and deductibles for homeowners insurance, to name a few examples. It is easy for these additional costs to become burdensome during times of economic uncertainty, particularly in the event that there is an unexpected downturn in the economy or personal financial setbacks such as the loss of a job or medical concerns. This is especially true in the event that there is a combination of these reasons. Additionally, the shift in employment patterns that took place after the outbreak has resulted in the inclusion of extra components into the equation that pertains to housing issues. Businesses are increasingly adopting hybrid or totally remote work arrangements, which may have an effect on the places that workers choose to reside in. This trend is expected to continue. There is a possibility that demand will decline in areas that were earlier considered to be excellent sites because of their proximity to business districts. On the other hand, suburban and rural areas might become more enticing. This is because these locations are easily accessible to business districts, which is the reason for this. Therefore, it is important to note that these transitions are still in the process of taking place, and if the trends in question do not become more solid, it may be difficult to purchase a home in an area that is based on the present trends. Aspects of the environment and the advancement of climate change are also becoming increasingly critical issues that need to be taken into consideration. It is possible that insurance premiums will be higher for properties that are situated in areas that are prone to natural disasters such as hurricanes, floods, and wildfires. Additionally, there is a greater possibility that these properties will sustain damage caused by these natural disasters. As the effects of climate change continue to have an impact on weather patterns, there is a significant possibility that the severity of these dangers may become increased. This will have an impact on the desirability and value of properties that are situated in locations that are considered to be sensitive. In spite of the fact that a great number of individuals continue to have a strong desire to own their own home, the year 2024 provides a climate that is particularly challenging for anyone who is contemplating the purchase of a home. When it comes to making a prudent choice regarding the acquisition of a piece of real estate, there are a number of aspects that contribute to the complexity of the situation. Instability in the economy, fluctuating interest rates, inflated home prices, limited inventory, and the ever-changing nature of employment and environmental dangers are some of the elements that contribute to this situation. Potential buyers should give careful thought to a number of factors, including the possibility of considering alternative options such as renting or delaying their purchase until the market has steadied and their own personal financial situation has become more solid. These are just some of the factors that deserve serious attention. It is vital to make a decision that is well-informed and can be viewed from a long-term perspective in order to avoid the potential pitfalls that many homebuyers may encounter in the future year. Homebuyers may meet these potential pitfalls in 2016. Thanks for watching. Don't forget to like and subscribe to our YouTube channel.